Monday, October 10th, 2022, Manepo 64, home of alternative economics and contrarian views. So we're still in Madeira. We're leaving tomorrow morning. So I should be back to normal from Wednesday, but I thought I'd make a quick video this morning, and I want to talk about the sovereign debt crisis that we are experiencing. And yes, it started with the UK and the gilt markets. They have calmed down the markets, but they're still concerned. And there's also the question of this LDI, liquidity-driven investment, which is just a euphemism for more and more leverage in the system that has been broken, an interest rate system that has been broken for decades by central banks. I don't feel very good. Caught a bit of a bad cold yesterday, but we've had a very good time here in Madeira. So, before I start looking at the Bank of England and what's going on, just wanted to talk a little bit about Russia and Ukraine. What I think is going on there, the bigger picture of everything, is a proxy war to unseat President Putin. And why is that? Well, because President Putin has challenged the dollar. Not just President Putin, but the BRICS countries. And they can't have that. I heard yesterday that even, got his name now, John Bolton, who's a rabid neocon and warmonger, saying that the US should assassinate Putin. So that's how bad it's getting. That's how desperate they are. Of course, they're not mentioning the dollar and the challenge to the dollar system, but I think that's what it's all about. If they can get rid of Putin and put a puppet of theirs in Moscow, they can stop all this move towards a currency based on real values, because they want this fiat currency system based on trillions of dollars created out of thin air. That was really basically started back in 1694 by the Bank of England to continue. What is my opinion of whether the West will be able to do that? I don't think the probability is very high, and I think the current system is, which has been around for hundreds of years, the fractional reserve system, is under pressure. And as I said, the Bank of England, the sovereign debt crisis is not over, and that's part of this, of course. So now to the Bank of England. I saw this morning in the FT here, Bank of England prepared to buy more gilts in final week of £65 billion scheme. So let's just quickly go through this article. It says the Bank of England is ready to increase the size of its daily purchases of UK government bonds in order to ensure there is sufficient capacity ahead of the 65 billion schemes ending on Friday. The BOE has carried out 8 daily auctions since its intervention last month, offering to buy up to 40 billion gilts, and has made only 5 billion of bond purchases. So you might say, well, that has worked well. They haven't had to do as much. I disagree, because the fact that they have to keep doing it shows that there's a problem. Anyway, let's continue. In a statement on Monday, the BOE said it was prepared to deploy this unused capacity to increase the maximum size of the remaining 5 auctions above the current level of up to 5 billion in each auction. The maximum auction size will be confirmed each morning at 9 a.m. and will be set up at up to 10 billion in today's operation, the BOE added. The BOE intervened in the gilt market last month following pleas from pension funds and the asset management industry to help stabilize the market after UK Chancellor Kwasi Kwarteng's financial statement sent shockwaves through the markets. Again, I don't think it's only about Kwasi Kwarteng's statement. It's been brewing for decades. All the debt-driven, credit-driven UK economy, they kept rates artificially low. for over 10 years, and now rates are going up. It could have been something else, if you know what I mean, and not quasi-quartang. The BOE justified its intervention as a way to restore market functioning in long-dated government bonds and reduce risks from contagion to credit conditions for UK households and businesses. Well, it's a bailout, right? They use all these fancy terms, of course. And to finish off, it says the bank also revealed a temporary expanded collateral repo facility, which it said would enable banks to help to ease liquidity pressures facing their client LDI funds through liquidity insurance operations. The facility will run beyond the end of this week. So LDI, basically LDI is having your cake and wanting to eat it. They have to promise returns in the future much higher than they can get in the future. So what they do, they leverage in short-term instruments to try to cover that liability. Leverage, that's the key operative word. LDI, I think, could eventually become the new subprime. And I think it's not as prevalent in the US, but I think there's a lot of other things going on in the US to do with private equity and hedge funds for defined benefit pensions that we haven't seen yet. So yeah, I think that's where the problem is. I think having something outside this fragile system, something like gold and silver, is still the way to protect yourself. Of course, some of you might not be able to liquidate your pensions, and I'm not giving financial advice here, but I don't think everything is solved here. And again, I guess the geopolitical situation doesn't help. So let's quickly look at where the markets are. It's 8:20 a.m. Madeira or London time. We got spot gold at 1688, down about 6. High's been 1700, low 1684. Silver is down 29 cents, 1.5%, 1983. High's been 2022, low 1966. Dow futures is down 40 points. Nasdaq is down 26. S&P is down 6. Quickly through the currencies. Sterling is unchanged, 111.01. Euro is down slightly at 97.26. Dollar is down slightly versus the yen, 145.26. Dollar is unchanged versus the Swiss franc, 99.50. And the dollar is down slightly versus the yuan at 712.50. Quickly check the ruble. Ruble is trading around 62. So the dollar has rallied a little bit against the ruble. And to finish off, let's quickly go through the general commodities. WTI crude is unchanged, 91.67. Brent is down slightly at 97.09. High-grade copper is up 2/3, 340. U.S. nat gas is down 1/3% at 684. And Dutch nat gas futures is at 150, down about 4.6%. The UK gilt yield curve, the 2-year yield is up 12 basis points. So, yeah, still not good news. I guess they're gonna announce their auction in about 40 minutes. Maybe that will help. We'll have to see. So it's at 4.18. The 30-year is at 4.44, up 5 basis points, and the 10-year as well is up 5 basis points. Check the 10-year Treasury yield. That's unchanged at 3.89. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide, and think about subscribing to my channel if you haven't yet. And with that, I wish you all a great rest of the day. Take care. Bye.